Okay, welcome back to the second part, the final part now of our weekly market insights. This is where I do my analysis on a variety of contracts. And just a reminder, so if we've got a lot of inflation data leading up to the FOMC meeting decision this coming week. So expect some big moves, I would say. And of course, it's going to be a question of whether they're going to skip or they're going to do 25 basis points for the Fed. And of course, CPI could swing it one way or the other. And then, of course, you've got ECB, which is pretty much a done deal for a 25 basis point increase. Now, the indices analysis, just going to warn you here, I've moved on now to the September futures contract as June expires this Friday as part of the quad witching. So just a reminder of the legend. So black numbers in the right hand column, they are going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. Claret numbers, these horizontal lines that I put in, are either levels where I see support or resistance, or whether they're on double, triple tops or bottoms. Just a reminder of the pivot point colors and also the fib colors, and there is at least one chart with the fibs this week. So as usual, start off with the Dow Jones. Now, again, stocks last week had a really good week. They really took heart in Powell's statement, and the sort of what the expectations are for 2024. And of course, just remember it's election year next year. So, the Biden's going to want to keep the market flowing. He's going to want to see rates lower. He's going to want to see stocks higher. He's going to want Americans to feel good again about the economy so that they vote for him. So looking at the daily, I've got resistance at 37,421. I've got support at 36,828 on that sort of uptrend we've got there. And then I've got support lower down at 35,870. Now, remember, what I analyze are the futures markets. So if you're trading CFDs, you need to make some adjustments to the actual levels. But the trend is still going to be the same. So at least you can see that. And you can always take a screenshot or a picture with your phone just to sort of keep these as reminders. Okay, so here's the 30 minutes. So market found some good support just below the pivot point on Friday, and it made it over R1 a couple of times, but it really couldn't sort of hold it, so it just bounced between the two, which is great. If you're a day trader or you're an intraday trader, because you can just play those levels. Again, if you want more information and understanding of how to do that, then just come along to one of our courses. This Thursday is one on trading techniques, but I will be including some technical analysis, risk management and other areas as well. There's only a couple of seats available for that, so that's this Thursday. Okay, so let's look at levels. So resistance 37,751 on the 30-minute chart, support at 37,536. If it does break on the downside, then it's 37,301, which is a breakout level. Now, just remember, the last couple of weeks of December are what I call for the needy and greedy. So, most traders will start to drop out of the market. So you're going to get less volume in there, which can lead to higher volatility. So if you are going to stay and play over the next couple of weeks, make sure that you reduce your size, have wider stops, but without increasing the potential loss, because that volatility could get a little bit on the wild side. Okay, so moving on to the S&P, gained a nice strong steady finish to the week for the S&P. I got resistance at 47.39. Above that is 47.45, but you can't see that because it's covered over by the 39s. And then I've got support at 45.49. So again, it's strong markets at the moment. Can they sustain that? Again, the fund managers love to see a high close at the end of the year for the stocks because it helps their valuations and probably their bonuses too. Looking at the 30-minute, I've got resistance at 47.80, 47.78, support at 47.57. Then I've got a couple of breakout levels lower down. So 47.26 I've got as a breakout on the downside, and again at 46.95. Looking at the Nasdaq daily, I've got resistance at 16.690. Then I've got support at 15.964 and 15.899. So we've got a couple of uptrend support lines there. Again, it's all facing upwards as you would expect, but strong. All those expectations of rate cuts in 2024 feeding in there, as well as the fact it's the US election year. Looking at the 30-minute, got a little uptrend there, so resistance at 16.884, support at 16.813. Below that I've got support at 16.756. If the market does have a drop, then I've got a breakout level on the downside at 16.576. Again, even the Nasdaq, if you look at that on Friday, it was really nice. It just sort of great for day traders because it just stayed between support of the pivot point and resistance of R1. So a nice day. Okay, so moving on to a couple of currencies. So the pound against the dollar. And again, seen that dollar weakness coming in last week, especially after sort of the Fed announcements and then the Bank of England and ECB as well. So, they were as dovish. So that sort of boosted their currencies a little bit and weakened the dollar a little bit. And you can see that from the chart there. But I do have a couple of resistance levels which both pretty much come across to the same at 12800. Then I've got support at 124.97. Then I've got a breakout if it drops below there at 123.73 with support at 120.96. So that is the pound against the dollar. Looking at the 30-minute, I've got resistance at pretty much the same level, which is 127.99, and I got support at 126.78. And then if it breaks through there next week, then I've got a breakout level at 125.93 on the downside, just in case the dollar starts to pick up some strength again. Moving on to the euro against the dollar. Again, sort of back up to the 110s, but it struggled to stay there as usual. So I've got resistance at 111.05, 110.09, then support at 108.04, then the support stroke breakout level lower down at 106.710. Now, again, the euro does struggle to stay above that 110 level. Of course, it's done it once or twice, as you can see back earlier in the summer. It got up to 113. So, if you're going to be a seller of it, you just be careful. When you look at technical analysis, look at your trading, it's all about the timing. Having the right idea is great, but if you get the timing wrong, it can still cost you. So on the 30-minute, I've got resistance at 110.23, I've got resistance at 109.48, and then I've got support at 109.35, so I would expect that to break out one way or the other there very quickly. Then a lower down, I've got support at 109.23. Now, if it does break on the downside, then I've got a breakout level at 108.98. So if it, again, if it gets through there, I would expect it to sort of come off pretty quickly and then test the 108.25 level. Just remember, these are always just my interpretation of the charts. They're not recommendations. Okay, so moving on to Bitcoin. So we've got a bit of a gap in the market there, haven't we? So I've highlighted that with the blue horizontal line. So 4,000 and 40,465 is the start of heading towards filling the gap if it's going to, all the way down to 39,310. Now again here sort of highlighting the gap. So for me the gap is from the close to the open of the next candle, which is where I've based those, not from the wicks themselves. So that's, again, that's an important point for me. So it's from the close to the open, not a matter of where the highest or lowest points of the wicks are on each of those candles. So I've got resistance at 43,512. I've got support at 39,984, which is right bang in the middle, well, pretty much, of that gap. So it's going to be an interesting scenario if it comes down to test those. So here's the 30-minute. I got resistance at 43,325. I got resistance at 42,458. I got support at 42,290. And then I've got some more support lines as it comes off, if it comes off, at 41,625 and 40,575. So yeah, I mean, it's sort of really done well. It's probably one of the best performers this year in the way of asset classes. When you look, everyone was doom and gloom last year. Oh, it's going through a crypto winter and all that. But what a recovery it's made in recent months. Okay, so moving on to the gold daily. Again, gold's been having some big swings, and you can see that. Great opportunities, but you've got to be able to afford and ride that volatility. So I've got resistance at 2,118. I've got support at 1983, 1956, and it's doubtful it'll get down there, but if it should do, then I've got a breakout level lower down at 1934. On the 30-minute, I've got resistance at 2041. Now I've got a breakout level if it does come off a bit more at 2018, and then support lower down at 1994. Remember, these are all based on futures. Okay, then finally looking at WTI daily. So here it's got that downtrend. I've got resistance at 77.18, lower down resistance at 72.30, and support at 67.47, and just below that as well in that downtrend, and then that horizontal support coming through there. And then finally the 30-minute chart, where I've got resistance at 72.31, 72.29. I've got support at 71.82. So again, I would expect that to break one way or the other pretty quickly. Then I've got support at 70.86, 70.63. If it does drop, then 69.24 is another support level. So I hope you enjoy the streamlined analysis that we do and overall report. Again, love to get your feedback. Details are on the next slides. Always happy to hear, especially if you've got any questions as well. Now Thursday there's a course, it's trading techniques, but I will be including lots and lots of different things, including technical analysis. So if you'd like to join that, then reach out to info@cymaxfintech.com, and if there's any spaces left, we'll try and fit you in. Apart from that, if you are going to trade, have a great week, but just be careful because the markets will be thinner and more volatile. Again, just finally, a little reminder of what we do. So apart from the YouTubes, daily newsletters that go straight to your inbox each morning to provide you with global headlines, global news, and also my views. And then if you'd like to subscribe, we also provide chart levels and pivot points. When it comes to courses, we offer everything from one-day workshops, one-week courses. One of those includes a free trading challenge, up to the comprehensive masterclass, which is an accredited course, and the next one of that starts in a week's time on the 19th of June. So if you're interested, then contact us quickly because those places won't be around for long. Now, also trader mentoring, where we help traders improve and get to that next level time and again. We consult to companies, FX and commodity exposure. We provide a whole platform and mass of educational content to individuals, exchanges and brokers. And as usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice. We're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital.